This is Alan Bush with ADMIS. In the stock index future, seeing prices higher in the overnight trade. This linked to news that the People's Bank of China added liquidity to their banking system. Of course, there were fears that the Central Bank of China was becoming more restrictive, which I think is the case. Apparently, though, they were a little bit too aggressive and they needed to take it back a little bit. So that helped some of the Asian equity markets to advance, and also U.S. markets. Also, we did have several economic reports today, all of which came in stronger than expected. Durable goods was better. Consumer confidence was much better than expected. We had a couple of housing numbers also better. And yet futures really not responding to that news very much. This is a sign, I think, that we will see some pressure developing later today. We still feel that the dominant influence is the trend toward rising U.S. interest rates, and that is likely to put some additional pressure on stock index futures longer term. Over in the currencies, seeing the dollar index advancing for the 5th consecutive day, being supported by these economic reports this morning, as we mentioned, all of which came in stronger than expected, which is bullish the dollar from an interest rate differential point of view. Also seeing a little pressure in the Australian dollar. We are seeing a trend toward lower commodity prices, which is bearish for the Australian dollar and also to some degree for the Canadian dollar. But we would focus on the Australian dollar as the most bearish of the currencies with what we're seeing now. So from here, look for lower in the Aussie dollar and also lower prices longer term. Over in the credit markets, we are seeing some pressure developing in light of these 4 economic reports here in the U.S. that were better than expected. Of course, while that's bullish in theory for stock index futures, it is bearish for the credit futures markets. It was just yesterday that we made a 22-month low in the longer dated Treasury issues. A bit of a bounce yesterday and in the overnight trade today, but all of that given back as these economic numbers this morning coming in on the strong side. So we do feel that with the Fed likely to scale back, likely to be at their September meeting, we will see pressure, I think, developing in the Treasury futures today. Of course, we do have supply this week, 99 billion in offerings, with 35 billion in 2-year notes today. So from here, look for additional pressure in Treasuries, and I think this is a trend that will probably persist for several months, possibly into next year. Once again, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.